Hey guys, let's talk VF Corp today, ticker symbol VFC. I'm going to be sharing my investment thesis with you guys. There's a lot of content to cover, but before we start, none of this is financial advice. All of this is for educational and entertainment purposes only. Always consult your financial advisor. And with that said, let's start. So, VF Corp is one of the world's largest footwear and apparel company. It owns a portfolio of highly iconic brands like the North Face, like Vans, like Tim's, like Dickies, and many others. And 80% of the revenue is actually generated by the North Face, Vans, and Timberlands. So in my thesis, I'm going to be only covering these three brands, and I hope you guys enjoy. Now, looking at the stock price, we're trading at 12.68. This was where we used to be in 2010 and 2007. So in the span of 15 years, we're somehow back to where we were 15 years ago. So something definitely happened here. So let me explain what led to the downfall to VF Corp to give you guys a little bit of context. So if I were to pinpoint what marked the beginning of the decline, it would be COVID-19. So COVID hit, supply chains were disrupted, and a lot of these apparel companies were panicking. They over-ordered inventory, fearing that the supply chain disruptions may persist, and this ended up um, causing an excess in stock, um, which eventually led to markdowns in price when they're selling because you have a lot of supply and very little demand, and erodes margins over time. But shortly after, the stock didn't really continue to fall. It actually went up, and this was because we were in a ZERP environment where money was cheap and the Fed lowered interest rates to flood the market with liquidity. And at that time, management they wanted to grow their portfolio, right? Money is cheap. They wanted to grow their portfolio. They decided to take on 2.1 billion of debt to acquire Supreme, the streetwear label. The original intentions were to reach a lucrative streetwear market, but in reality, they bought the peak of the streetwear hype, and what followed was that Supreme didn't really perform as good as they expected. Vans was still doing okay at this time. Tim's and the North Face were all still growing. And then we see signs of inflation spiking, and that means a rate hike might happen. And I think at this time Vans were having a little bit of issue as well. Like management was talking that was guiding that Vans might decline. And looking at the total debt of VF, yeah, look at that. So huge surge in debt, and we reached 8 billion at one point. That's a lot of debt. And given that inflation was spiking, that means the Fed was about to rate hike, and he eventually did, and we entered the quickest rate hiking cycle in history. So in a span of a year, the Fed raised rates from 1%, sorry, from virtually 0% to 5%. And then we had the first Vans decline, and then the second Vans decline, and oh my God, we now have a brand problem and a debt problem with raising interest rates. And then eventually the CEO exited as well. And now we have a sinking ship with no captain. And yeah, it's free fall from here. Went all the way down to 15. And now we enter Brackendarrow. So this guy Brackendarrow, he came in at a time when sales were falling, margins were collapsing, debt was ballooning, and interest rates were at record high levels. He came in, immediately addressed the debt problem. He slashed the dividend, he lowered the cost base through layoffs, he sold a bunch of commercial real estate, he sold the corporate aircrafts that the company had, and then he did a strategic review of the brand portfolio to identify which brand could actually pay for something and also isn't synergizing well with the other brands. And he sold Supreme. That happened a year after he joined. And then he also reset the global leadership team. He had a new CFO, a new chief human officer, a new brand president for Vans, a new one for the North Face and Dickies as well. He reset the entire company, in the span of these 2 years. Stock was trading between a range, and then eventually VF was removed from the S&P index and was added to a small cap index. And at this point, when the Supreme sale was announced and people realized that VF is actually not going to go bankrupt, because just to remind you, debt was really high, and just to let you know, they earn about 1 billion of free cash flow at most. So this means this would take them a really long time to pay down. And once people realized that the company wasn't going bankrupt, people got yippy again, and the brands were actually recovering at this time. Timberland was growing, the North Face was growing, Vans was, it was it was stabilizing, but not really. And then we enter Liberation Day, where Trump threatens 40% tariffs on Vietnamese imports, and no one on the street was expecting that, given that most apparel companies shifted their supply chain reliance from China to Vietnam just to avoid China tariffs, but instead we get 40% Vietnamese tariffs. So markets crashed. And now we get 20%. That's the official number now. And we're currently trading at 13. But keep in mind, I want you guys to keep in mind that Bracken came in, has done a bunch of like a deep cleanse and a reset to the company that I'm gonna elaborate more about in the span of these 2 years. And we're actually lower than when he first came in. So keep that in mind. Now let's look at the key financials of VF Corp. So in fiscal year 2023, revenue was at 11 billion. Now we're at 9.5 billion. If we look at the operating margin, we used to be at 9%, now we're at 3%. This 6% difference of operating margin, all of that money could have been used to pay interest to pay down debt. And sadly, that isn't happening anymore. And management talks about this. They said in their previous investor day, this was the one in October, they said we are operating well below our historical levels. And then they point out these specific data points. In 2019 to 2020, they generated 13% of operating margin. And then that declined to 10, and then it went to 5, and then it went to 3. Pretty bad. But they did say that their medium-term target, which is in fiscal year 2028, they're going to return operating margin to 10% by ensuring that gross margin is kept at 55% and above. SG&A percent of revenue should be 45% and below. And if you don't know what gross margin is, this is the cost tied to production, things like raw materials, manufacturing costs, and then SG&A would be your marketing, advertising, salaries, IT systems, headcount, all that stuff. And remember how I talked about Bracken coming in, um, and then what he did was he reduced headcount, he did some layoffs, he shut down stores. All of that is going to reflect in the margins in the coming years. And I think that the subsequent fiscal year 2026 is going to be the year where we see significant improvement in operating margin. Management further elaborates on how they're going to achieve their operating income expansion of 500 to 600 million. And keep in mind, this is a company that generates 9.6 billion in revenue. And if you have 500 to 600 million of operating income expansion, that roughly corresponds to an additional 5.5% operating margin. And remember this 3% operating margin we had in fiscal year 2025? Add a 5 to 5.5 to that. So expect something like an 8% operating margin in the next fiscal year. And they further elaborate on how they can achieve that through gross margin expansion and specifically product creation. They're going to elevate their design and make their products desirable. If you're serious about outdoor exploration, they are going to convince you that you have to buy the North Face. If you're serious about hip hop, if you're serious about fashion, you got to get a pair of Tims, and not just one Tim. You got to get multiple designs of Tims, and then maybe a boat shoe as well. And if you're a skater, if you're in the out scene, get a pair of Vans, right? And on the SG&A reduction, They talk about store fleet, labor optimization, digital and technology acceleration, logistics, and organizational effectiveness. That's that's really just layoffs, AI, and logistics. Now let's look at the quarterly revenue of the brands at VF Corp starting from 2021 June. Vans is clearly the biggest loser here, starting at $1 billion of revenue, and then it eventually declined to 900, 750, 600, and now we're right below 500. And that peak to trough decline is roughly 50%. But the whole thesis is saying that we're actually going to stabilize and we're going to inflect. And I'm going to show you some evidence of that later. The North Face is a different story. If you look at the green bar charts, it went up, it went down, and everyone got nervous here because Vans was already declining, and now the North Face. Is this over for this brand, especially when there's a debt problem? But we actually inflected, and if you look at the orange bar chart, we went up, we went down. Everyone's nervous, everyone's pissing themselves, and then we went back up. All right. Um, And keep in mind, this was a time where there was an interim CEO, there was no real leadership. Timberland is another is a funnier one. Look at the green bar charts. Down, down. Uh-oh. Vans is really down, and Timberlands is down year over year twice. Are we is this over? Oh, guess what? We inflected. And then look at the orange bar chart. Flat, down, everyone's nervous, and we go back up. The North Face and Timberlands are actually fine. So as long as we have a sign of life shown at Vans, I think we might be able to double. Now let's look back at the margin story of VF Corp and look at the trends of gross margin. Remember how management wanted to achieve by fiscal year 2028 55% of gross margin. Let's see if that is happening. So if you look at the yellow charts here, this is the Q4 data of the fiscal year. So this is Q1, Q2, Q3, Q4. And notice how it declined, and then boom, massive improvement. And this is what management is talking about. This is premium pricing. This is what premium pricing, shutting down value stores, markdown management does. Okay, this is what it does. Massive improvements in gross margin. And I hope the eagle eyes amongst us, amongst the viewers, spotted that this yellow bar chart is typically the lowest amongst the fiscal year quarters. Okay, look at how this yellow chart is lower than the other three, lower than the others, lower than the others. And for this specific quarter, it is no longer the case because the improvements are kicking in. And another more important thing that I want to point out, which is the next quarter typically is higher than the previous yellow chart. Higher, higher. Think what is going to happen in the subsequent fiscal year if all of them are higher. That means gross margins are going to be at the minimum 53%, not by fiscal year 2028, by fiscal year 2026, which is next year. All right. Now, the CFO at VF Corp explicitly talks about operating margin expansion in fiscal year 2026. And I quote, while you won't see leverage on the operating margin in Q1, we expect to see operating margin expansion in fiscal year 2026. What he's saying is that in Q1 fiscal year 2026, not much operating leverage, but in the subsequent quarters, Q2, Q3, Q4, expect a lot of operating margin expansion. And why is that the case? That is because Q1 of the fiscal year, which are these brown cells here, they typically generate the lowest revenue. Just look at how low it is relative to the back to school quarter and the winter quarter. Just look at that. Okay? And what he's saying here is that the revenue that's generated in Q1 just breaks even with the fixed costs and some of the variable costs. But any but in Q2 and Q3 when revenue numbers are so high, okay, that's when every incremental revenue doesn't scale with fixed costs. It only scales with the variable costs. That's when true operating margin expansion happens. All right. Now, here is something from the 10K where it talks about how VF's revenues are weighted towards the second half of the year. And this is the calendar year. So that means June to December. That's when VF generates the most revenue, which is back to school and the start of winter. That's when people buy the North Face jackets and people buy Vans and Tims. So that is their strongest period. And then we also get this buy signal from insiders, where in May 2025, insiders were buying $1 million of shares. So this was a million by Bracken. This was 500K by Abhishek, about 600K from Richard. And this is a lot of money. This is cash directly from their pockets. And you might say Bracken's a 100 millionaire. A million isn't a lot. I think a million is a lot if you're considering liquid cash. This guy might have a lot of money, but it could be in Logitech shares, it could be in real estate. This is a lot of a lot of money in proportion to the liquid cash that they have.
So now let's look at the seasonal patterns of VF Corp's stock price performance. I've got data from 2019 to 2025, that's 6 years of data. And this shows the performance throughout the year. Each line shows the performance throughout the year for that specific year. And the white line is the average of those. And typically we see a decline at the start of the year, and then it grinds sideways. And then by late July, early August, where the fiscal year starts, we see a big boost. And by the end of the year, we see a strong recovery. And so, seasonally speaking, fiscal year, the beginning of the fiscal year is when you want to be long. And look at the blue chart. This is where we currently are. All right, look at this thing. We're currently here. And this might be the best time to go long, just looking at seasonal patterns.
Now, let's talk about the jockeys that we're going to be betting on. Let's start with Bracondero. This guy came from Logitech. All right, he was a CEO of Logitech. While he was there, the stock price increased tenfold. And let me remind you, Logitech sells mice, keyboard, microphones, webcams, which traditionally was a commodity. And he somehow, with the design team there, managed to make a commodity something desirable. He somehow made it ergonomic, somehow made it as if you're a professional desktop user, you should be using our Logitech products. He somehow made that happen. Just imagine what he could achieve with brands that are actually sexy. All right. So that's that. And we've got Caroline Brown, the global brand president of the North Face. She wants to double apparel revenue. She wants to double equipment and bag revenue. She wants to triple footwear revenue. And that is all part of the North Face growth plans. If you haven't checked out the Investor Day, she talks about that in the Investor Day. And she's an amazing, eloquent speaker. Go check it out. And then we got Sancho. Sancho came from Lululemon, all right? She was chief product officer at Lululemon. She helped and she played a pivotal role in driving product innovation and brand experience for Lululemon products. So she definitely knows how to grow a brand. And allegedly, this is a fun fact, she wore Vans old schools to the office all the time while she was at Lululemon. So this girl here definitely knows a thing or two about Vans and also knows how to grow brands. Nina Flood is the brand president of Timberlands. She's an internal promoted person. She's doing extremely well at for Timberlands. And then we've got Alistair Curtis. This guy was chief design officer at Logitech, which for which he worked with Bracken. So Bracken basically poached this guy with him when he came to VF, and now he's the chief design officer at VF. Just imagine your MX Master Series and how efficient Logitech is as a company. This guy is gonna bring that over to VF. Pretty amazing. Martino Scabbia Gureni, CCO, Chief Commercial Officer. This guy, he used to lead the EMEA platform at VF Corp. He led it until the point where EMEA outgrew the Americas over the years. That's why the North Face is so strong in Europe. It's all because of this guy. And now he got promoted to lead the Americas platform and also the EMEA platform. And now he's going to port that framework that worked in EMEA to America. And that's the whole point of having a brand portfolio. You want to have best practices shared across brands and shared across regions. And this is that guy that's gonna do it. And we've got Chris Goebel. This guy came from, I think, Gap, and yeah, he should be fine. I didn't study too much about this guy. And we've got Abhishek Dalmia. This guy was the digital transformation dude from BCG, where he helps different apparel brands perform their digital transformation. He's been doing that for the past 8 years. He helped Lulu as well. All right. And now he's working full time as chief operating officer for VF Corp. And I think he was the one who helped with the website of Vans, which is a very great upgrade. Now let's talk about Vans. Is there a sign of life in this brand? And I think there is. Celebrities and fashion icons are wearing them again. This is your classic trickle down influencing method where your top bracket influence the bottom bracket influences the guys on Instagram, and then it goes to the mainstream. It flows down to the mainstream. Vans recently partnered with Lil Uzi Vert. And if you know Uzi, he's a fun, rebellious, he has that I do what I want energy. He even has a song for that. And he fits perfectly well with the brand image. Look at his hairstyle here. So punky, all right? And if you thought Sydney Sweeney with American Eagle was a genius marketing campaign, wait till you see Uzi turn up with his summer tape, okay? And in the middle here, we got Nick Wooster, a fashion icon amongst the males. And look at him in the checkerboard Vans. And we've got Cesar in the checkerboard Authentics. And the Vans Authentic silhouette is actually trending this summer. There's an article that talks about Olivia Rodrigo's $55 retro sneaker that's trending this summer. And if you click on that article, it's actually the Vans Authentics. Comme des Garçons is bringing back their beloved Vans Authentic collaboration. Valentino is actually collabing with Vans to recreate on their Vans Authentic canvas. And then there's Au Départ, which is this French luxury brand, which is working with Vans. And look at this Goyard looking Vans. It's amazing. And Dior is actually made their own Vans. And I don't even know if this is legal because I checked and this is not really a Vans and Dior collaboration. This is them creating their own shoe and it looks exactly like the Authentics. I don't know if this is legal. Someone in the comments let me know if this deserves a lawsuit. And most importantly, Vans is reconnecting with its roots again. They're hosting events, bringing people together for the skate scene, the surf scene, the snowboarding scene, the alternative scene through the Warp Tour, and the modern youth with the collab with Fortnite. And look at this. They're hosting the Dime Glory Challenge again. Everything is back. And Vans is also experimenting with these new innovative marketing techniques with Uzi. Uzi has traction. Wherever he goes, people go. And recently, he went to the Fifth Avenue store at Vans. He went in, he bought a pair of white old schools, and he signs them. And he puts them on top of a bus stop. Okay, this is the image of the bus stop, the top of the bus stop, the roof of it. And then he posts an Instagram story saying, I love my fans. This is a gift for you guys. And people were rushing to the store trying to find this thing. Okay. And you might think this is silly, but this is how social media marketing works these days. Okay. And he's also skating with Vans. This guy skates as well. And he posts stories all the time. and that sort of helps with traffic. And then there's this data point on organic traffic that I have to share with you guys. So there was this guy on Twitter that shared with me this data point. He has access to all these SEO tools that digital marketing agency uses, and he shared with me the organic traffic of vans.com. And guess what? Year over year, it's up. So it was at 2.3 million in 2024, and now it's at 2.9 million. And I quickly search what organic traffic means. It's the estimated number of clicks a website or URL receives from Google search results each month. Of course, it's debatable whether the estimation is actually correct or not, but this is just another data point that proves that the turnaround is actually happening. And there's this other metric, which is referring domains, that is up 11,000 year over year, 21 to 32. And this means the amount of websites that are referring to the Vans domain is actually increasing. And let's just validate that by going through a couple of articles. So let's see what we have here. We've got an article from Mary Claire. Cesar's Gucci bag feels so retro with a signature $70 Vans sneakers. She sees your slim sneakers trend and raises you Vans. I don't even know what that means, but yeah, she's wearing an old school. 7 best Vans sneakers in 2025. And it's the white old school, okay? A slick Vans skate shoe wrapped in beautiful wool blankets. 11 hours ago by High's Nobiety. Oh, it's a Van Doren approved old school. Pretty cool. After 59 years, Vans found a new way to ruggedize its original sneaker. It's the authentic Zip Vibram, which blends modern trail tech with decades of surf heritage. Oh, look at that. Authentics with a zip and with a Vibram sole. Pretty cool. We've got one from Soul Retriever. Vans sneakers are available to purchase in Fortnite. Another one from High's Nobiety. A safe pair of impossible, beautiful blue suede Vans skate shoe 5 days ago. It's the Vans Safe Low. Oh, this one's sick. This one's sick. This is the collab with Palace, I think. Pretty cool. Another one from High's Nobiety. Vans Next Level skate shoe has no business being this clean 2 days ago. Pretty clean. This is the Vans current Capos skate shoe. Vans Dummy Thick Skate Shoe is too luxe to skate 27 days ago by High's Nobiety. It's the Skate Cap 4. Too luxe to skate. Cool. 12 hours ago, High's Nobiety. A most elegant boat shoe by none other than Vans? A boat shoe? Okay. Okay. Interesting. Don't know if this is gonna gain any traction, but interesting. Skateboarding.com, the 7 best Vans off the wall skate shoes of 2025 so far. And this was posted in May, 31st of May. Got the old school 36 Vibram sole, the JJ Allen half cab, leather checkerboard. Pretty cool. Pretty cool. What's this? Olivia Rodrigo's $55 retro sneaker is trending this summer, and I've talked about this. It's the Authentics. Another one from High Snobiety, Vans goes Goyard. Oh yeah, this I've talked about. Jeekers for skaters. Another one by High Snobiety, talking about Jeekers, where it's a jean sneaker. And they've got a jean sneaker that's being sold in Japan. First look, Vans iconic skate shoe goes gone undercover 26 days ago. Ooh, pretty cool. They collaborated with this Japanese streetwear brand for their high tops and slip-ons where punk meets luxury. Cool. Another one, old school's new future. Skate and surf's next gen take over the classic Vans silhouette. So these are the Vans skate and surf um, representatives, and they are redesigning on the silhouette. Oh, this is pretty cool. I like this one. Ooh. Ooh, I like this one. This bold red shade on the silhouette. It's pretty cool. This one, yeah, this one's more alternative. Some people might like it. Van studded leather skate shoe escape park couture. Couture? Okay, I actually don't know how to say that word. 22 days ago. Interesting. Oh, this is the Satoshi Vans. Oh, man. Vans classic skate sneakers are prestigious trail shoes now. 28 days ago. Okay, cool. Louis Vuitton. The LV Gone Vans. What's this? Hey, this ain't Vans. The hell? The hell? LV just made their own Vans. How's that even legal? Anyway, it definitely is legal. It's just like, come on, just collab with Vans, man. What are you guys doing? Just goes to show the silhouette is actually desirable. Vans marshmallow flavored skate shoe is a classic at its sweetest 2 months ago. Okay, pretty cool. Sold in Japan. Uzi models for Vans. Premium old school campaign. Here's how to shop the sneakers. These are all your backlinks. OTW by Vans with Satoshi Nakamoto just dropped. Get your first look. Now let's talk about valuations. I've segmented this to bearish case, base case, and bullish case, assigning a probability of 30%, 60%, and 10% for correspondingly. I personally think the bearish case is a bare minimum. All right, they are at least gonna achieve a 0% revenue growth, and the EBIT is always gonna expand, maybe to a minimum of 7%. The base case is 3% revenue growth, 8.5% operating margin. And given that you are growing revenues and you're also expanding your operating income, given that the expectations going forward is that increasing, revenues increasing, operating margins continue to expand, the EV to EBIT multiples should be around 15 to 20x, and and that gives you a stock price of around $22, taking into account the debt that they have on the balance sheet. That's $22, right? And if you take into account that the bearish case might happen, the bullish case could also happen using these probabilities, you get a fair value of $20.69, which is a 63% upside. And with that said, I'm gonna end this. It's been a long day. So this is what Bracken said in the previous investor day. He basically has done many turnarounds, so he's talking about his experiences in turnarounds, and he said, I've experienced in seeing the light when times are the darkest. I know the feeling when a situation is improving, even when there isn't much evidence. I know when the product is going to sell, even though we're just in the pre-market phase. And I know when the team is advancing to greater terrain, although on the outside, the brands still remain in decline. Now, that said, thank you guys for watching. None of this is financial advice, and have a good one, guys.